What's up, guys? You got Crypto Chuck back here to Group Crypto Black. We're back at it again, baby. Hope you guys having a great day. Market is up right now. So, guys, make sure you do right now. Make sure you like, share, and subscribe to the channel. And right below, guys, follow us on all different social medias. Guys, right on The Crypto Black on Twitter, TikTok, Instagram. Also, we had the Facebook group, Crypto Black Facebook group. So make sure you guys follow us on all of our different social medias, and make sure you hit the like button right now, guys. We're gonna do a Q&A at the end, but man, we have some real good news going on, big news going on for crypto today. So we want people to actually come inside, learn about what's going on, and then we'll get this going, okay? But yeah, guys, I'll tell you right now, this is what we're talking about, man. We're starting to see, you're starting to see some bailouts, you know what I mean? But not the big ones yet. We're waiting for the interest rates to, start going low again. We're going to start waiting for the bailouts. The Fed's got to break something first. So they're going to keep pushing the rates up. They're going to break something. Rates going to come down. They're going to start bailing everybody out. And then all of a sudden, you're going to start seeing the market start going back up again. But we start to see some good stuff going on, whereas a lot of debt being paid, a lot of the problems, the issue that was going on in crypto space starting to get paid. And we're going to talk about DeFi, you know what I mean? And a lot of people can come in because it's easier for them to, just get on these corporations and just turn around and just pretty much just, open up an app and just get it's working, and then somebody hold their crypto for them, and then they send it, whatever like that. But they don't hold any custody of it. They don't own it. They don't, you know what I mean? They can't do what they want to do with it. So, guys, we're going to talk about, the problem reason behind like the Celsius and, you know what I mean, and the Voyagers and all the exchanges and everything. That's why we always say, not your keys, not your cheese. You know what I'm saying? Shout out to our guy Bitcoin Zay out there. But yeah, man. So, man, but let's look at Bitcoin today. Right now, Bitcoin is at $20,255. We did get a wick up here a couple days ago. We tried to go almost 21, try to get to 21,000. Couldn't make it, but you guys can see right here, man. We were bouncing in between here. This nice support and resistance. My support is at 17,529, and then my resistance at 21,732. And we hit that resistance back on June 26th, but we've been here since June 17th. So we've been here since June 17th, guys. Trying to get out of this range here, guys. So you're looking at about what, 19 days. Trying to get above this range here, trying to get above here. So Bitcoin got to make a decision. And we'll see what the decision is going to be, to the upside or going to be to the downside. But it's going to be a side. So we got to figure out where it's going to be. But we want to make sure that we're staying, wherever side it goes to, we're going to make some money off of it. Either we're going to short it when it breaks that support, or we're going to long it when it breaks that resistance. So we just sitting back chilling and we waiting. But we in that box. Just like we was in this box right here for a long time. We was in this box here. Let's see how many days we was in this box. Before we broke to the down, we was in this box till we broke to the downside. Broke to the downside. We was in this box for a total of 33 days. So, you know what I mean? So, we're gonna make a decision. Let's see if we can do a repeat for another 33 days here, and we break down or we push up. Let's just see how that works out. But so Bitcoin, we check out Ethereum. Ethereum is back over $1,100, what we like to see. So it didn't break I'm waiting for Ethereum to get down here to the 1057. Get out 1057, get my alerts in. I know I do another strong short on ETH, but we might do a push up. But man, I'm telling you right now, the good thing about ETH is that I'm sending ETH around. I sent some tokens on ETH blockchain the other day, man. It only cost me 86 cents, or the other night, it cost me 86 cents. So I was happy about that. But so you're looking at ETH, BNB, still, you know what I mean? We trying to see, it had a nice little push up. We have our support right here at 215 on BNB. So it's always a good coin, in my opinion. Cardano got some stuff going on. Seek though, but Seek is what I'm actually holding. I'm very bullish on Seek. I've been bullish on Seek for years. And we're starting to see a nice push up for Seek. They having their first land sale. I retweeted that out. So make sure you guys follow me on Twitter so you know what's going on. But they're having the first land sale on July the 15th. So you're gonna see a nice push up till then. We're expecting, you know, there's no guarantees, but we're gonna see a nice push up for since then. But man, you know, we've been, man, Seek had his bottom down here at what was this, at 0.09 cents. And we pushed up, man. Yep, 294% since June the 16th. So nice good push up for Seek. You know, we definitely happy about this right here. But man, let's go get to some news today. It says Celsius was, you know, after Terra Luna, then you start having all this stuff going on with Celsius. Celsius repays $183 million on DeFi protocol maker, gives back collateral. Blockchain data shows. It said the troubled crypto lender paid down $183 million of his debt to decentralized lending protocol maker. Blockchain data shows possibly in a bid to recover Bitcoin linked collateral that otherwise will remain trapped. So it says Celsius, the crypto lender, halted withdrawals, reportedly cutting jobs to to stave off a liquidity crisis, has been aggressively repaying debt on one of the largest centralized protocols. You know, so it said July 1st, on-chain data shows that Celsius has paid down $183 million of its collateral debt to maker. It says, going by just verifying by Etherscan, the down payment originated from a wallet linked to Celsius. The debt was repaid and maker's protocol native stablecoin DAI. The transaction resulted in not only the extinguishment of the debt, but the release from maker of 2,000 wrapped Bitcoin worth $40 million. We all know that the Celsius have been paying down their debt and lowering their liquidation. So it says, given the DeFi loans are over collateralized, it makes sense that for them to do this, as the value unlocked from paying back their loans, collateral less loans, is greater than the value of loans themselves, should they opt to not repay. Now, Celsius representative didn't immediately return emails requesting comments. So showing right here that they made their payments. So it says, May, the firm lent out more than $8 billion to clients and had $12 billion in assets under management. Loans on decentralized finance platforms such as Maker are generally over-collateralized, which means that the borrower pledges more assets and value to the lender than the value of the loan. It says after payment liquidation levels of Celsius wrapped BTC dropped to $2,722 according to the website DeFi Explorer. WBTC now trades at $20,200, making the loan 11.01% about times over collateralized. So it says so Celsius still owes $41 million, saying, but you know, it brought it down to liquidation prices at $27.22. So Celsius is going to have, Bitcoin to come down to $2,700, pretty much $2,700 for Celsius to get liquidated. So what it could do, it could push the bears out because they was chasing, they was trying to get word on the street. They were trying to get Celsius liquidated as well as Michael Saylor liquidated, but it's looked like the bears was full and the bears actually lost. You know what I mean? Because they're going to pretty much cut their own throats trying to push the price down. All right? So it's too much money in it, and they try to get enough Bitcoin themselves, for when the rally come back around, they want to be in the game as well. But yeah, so that's what's going on with Celsius right there, guys. But man, this here is big news that I think people really need to understand, because when you're in a bear market and and let's just say the prices are down, right? But if you're in a bear market, a lot of people, they're like, man, the market is down, the prices are low, and what should I do? Or everybody leaving the game? What's going on? But guys, look at this right here, man. When you in the bear market, it's time for you to hunker down, time for you to get in the game, time for you to see what's going on, who's the movers and shakers, accumulate what you want to get. It's a ton of money being made and a ton of developments happening in crypto. So people gotta understand that, all right? Just because the prices is down, and put it like this, just because Target price is down, Netflix price is down, is the movie stop coming on Netflix? Is the product stop is not in Target anymore? You can't shop in Target? No. The beat goes on. Business as usual. You know what I mean? You gotta understand, crypto, Bitcoin specifically, is a technology. All right, so you're gonna have the fluctuation, the volatility in the price for now, because as more money come in, the volatility gonna go lower. All right, that's why you don't see gold really move a price like that. But so 85% of merchants see crypto payments as a way to reach new customers. Says the crypto payment report noted that the crypto payments fees are around 1%, which is much lower than other payment options that charge 1.5 and 3.5%. It says in a report titled "Paying with Cryptocurrency," the researchers found that among businesses with an annual income of $1 billion, 85% are adopting crypto payments to find and gain new customers. On the other hand, 82% of all the merchants who participate in the survey cited crypto elimination of middleman as their reason for accepting it as a payment method. All right. So it says apart from these, the results also show that 77% of the survey merchants are also drawn to accepting crypto because of lower transaction fees. According to the report, the fees for processing crypto transactions are around 1%. This is much lower than the usual fees from 1.5 to 3.5% charged by other payment options like credit cards. All right. So it says while most of the report shows positive perspective on crypto, some merchants report that technical barriers and challenges still get in their way of adopting crypto payments. Of the merchants that they do not accept crypto yet, 68% said that this is because of the challenges that they face in the implementation of the technology at the checkout. And that's the thing, guys. And that's where, you feel that void. So if you're out there, you're in this space and you say, okay, these companies don't understand it, don't understand technology. I do. I understand, okay, how you set their payment, how I go to their wallet, how they can take their money if they want to, the crypto, and then put it into a stable coin, and then they want to cash out. This is how they do it. That's your lane. You can create that lane. You can go all around pretty much the world, really. And then, because crypto is global, go around the world, really, and literally just, and that's an industry for you right there, all right? There's the people that's uneducated. It's an industry of education in crypto. It's a brand new technology, all right? So you can go around and educate people on exactly how to actually use this this new technology. Because that's what it is. It's a technology. It's not a get-rich-quick thing. It's a technology. That's why when the tech industry or the tech stocks go lower, Bitcoin drops. When it pushes up, Bitcoin pumps and other crypto pump. All right, it's a technology, guys. Don't get lost in the sauce. All right. And despite the crypto winter, a report published by Cointelegraph Research in June showed that a wide range of companies coming from various industries has already integrated crypto payment options. For entertainment platforms like the travel booking platforms, the crypto ecosystem continues to expand as global adoption progresses. In the same month, Ben Castellan, an executive at trading firm AAX, told Cointelegraph that despite the bearish market, Bitcoin adoption and metaverse development continues to advance. According to Castellan, this is a good opportunity for businesses that are looking to tap into the crypto ecosystem. Right now is the best time to be in crypto when it's slower. I'm telling you, it's so hard to get into crypto and so hard to be in the crypto when the market is pumping. The reason why is you don't know what's what. And you fall for scams, you fall for this, you fall for that. So when you're in crypto winter, you're just sitting back, you're chilling, you got your hot cocoa, you know what I mean? You just analyzing, seeing what's going on and what you need to do when you're inside crypto winter. So when the summer come out, and, you're working out and everything. So when the summer come, crypto summer come, and the market is pumping, then, you already worked out. You good, you know what I'm saying? You in shape, you looking good, you feeling good, you know what I'm saying? Because you worked out, you did what you need to do during crypto winter. So, guys, that's what you want to do. You want to be able to, and these technologies, this technology is here to stay, and different businesses and different people are going to take advantage of it. You can send money across the world, man, for next to nothing. Imagine before you couldn't do that. You know what I mean? Imagine trying to send $1 million to California from New York. You know what I mean? You say, I got to have it there in an hour. It's not going to happen. All right? Except for crypto. Now, also, what people need to understand is when you're dealing with this, and I'm going to these conferences, I'm seeing so many businesses, multi-million-dollar businesses at these conferences, and they just like, listen, we're trying to use this technology, we're trying to integrate it, how we can use it to our business, you know what I mean, to make it work, because they know it's the future. So guys, I'm telling you right now, you do not want to run away from a time like this, because the businesses are out there, and they are out there, and they're trying to put this together. I was speaking with an executive over at Warner Music Group, and she was telling me that, hey, look, we're trying to integrate this into the label. The artist is not even, pretty much like, understanding it or trying to do it yet. So just imagine, there's another lane, you see what I'm saying, where you educate the artists, you know what I mean, big time artists, they don't get it yet. So, and the metaverse and Web3 is going to be crazy. But I see this article here, this is very interesting, I wanted to share this today. This is true. It's back to the not your keys, not your cheese. All right. It says DeFi designed to avoid this BS. Compound founder says about crypto bailouts. So it says decentralized finance protocols don't need to get bailed out, and were designed specifically to avoid this BS. He said the founder of DeFi Compound, Robert Leshner, has said, discussing the troubles currently faced by decentralized crypto lenders like Celsius, Voyager, and BlockFi in a recent episode of the Unchained podcast. Leshner said that companies that are in trouble because of the way they are operated. So it's companies, it's greed. The greed of Wall Street and the financial sector, traditional financial sector, had came over to crypto. All they did was put a lipstick on that says crypto, but it's the same one. It's the same people. All right. So he says, quote, said they're a peak. They're run based on the whims of people who are not very good managers, and they do not leverage any of the inherent new technological advantages of crypto itself to run their businesses, Leshner argued, end quote. And also, guys, you go to these different conferences, you'll see people like, they like, oh, I'm executive at OpenSea, or I'm this executive at Coinbase, or I'm this, I'm that. And you're like, oh yeah, I got a crypto and 8 months ago. You're like, wait, what? You're executive at OpenSea, you're executive at Coinbase, you're executive at this company, that company, this big company in crypto, and you just got into crypto 6-7 months ago, or a year ago, or 2 years ago, 2020. That's when you got into crypto. You was big executive. That's the thing. They're bringing people from the traditional world over here. So traditional financial greed coming over to crypto, and it's the same exact practices. So you don't even have these not even crypto people. These are companies that just want to take advantage of the crypto space because they say it's a new sector, new technology with new money coming in. They just want to take advantage of it. So you got to be worried and read up on these executives and see, okay, hold the time out. Hold the phone, time out. You just been in crypto for 6 months? You just got in crypto 6 months and you over here running a major crypto company? Red flag, time out, hold up, wait a minute. That's what you guys gotta be doing. Check the LinkedIn on these people. They're running their businesses in the same exact way as Wall Street was running itself in 2007, the compound founder said. Exactly what I just said. I promise. I don't read these articles, guys. I want to be authentic. I want to read them and then, and then get it. Get it from when I read it. I just see the headline. I was like, okay, cool. You know what I mean? So, and exactly what I just said. This is exactly what's going on. These are the same Wall Street people. They just came from Wall Street to crypto. That's it. You know what I'm saying? So it says, per Leshner, it's incredibly sad to see people repeat the exact same mistakes when the tools to avoid them are right in front of their faces. He added that he hopes that the industry can learn from the experience and realize why they have DeFi protocols and not a business with spreadsheets. Exactly. Quote, this is why we like DeFi protocols. They're transparent, autonomous, and are not based on the whims of an incompetent manager. They just run themselves based on open source code, and you can see exactly how it works and does what it says it's going to do. End quote. Right in GitHub, baby. So it says, as for the crypto lenders, the businesses practices, he said that all the nonsense could have been avoided with DeFi. That's why I love DeFi, decentralized finance. All I have to worry about is the code. Link my wallet to the smart contract, and it do what it says is designed to do. Not nobody doing this, flipping this, trying to put over here and be greedy, trying to make a little more money, trying to make $1 out of 15 cents, buy with other people's money, and then turn around and say, oh, no, I'm sorry, you can't get your money back. Nope, DeFi, I'm good. So it says, Leshner once again reiterated his point during discussion FTX on FTX with Sam Bankman-Fried and the credit line FTX parent company Alameda Research offered to Voyager on the condition that the crypto lender continues to honor customer withdrawals, pointing out the difference between pure DeFi protocols like MakerDAO and Compound and centralized crypto lenders. Leshner said DeFi protocols have no ability to halt withdrawals. Nope. The code is already there. Written, done, stamped, and approved. All right? So this code is doing what it's supposed to do as opposed to rules changing when someone feels like it, he said. And this is so true. So yeah, guys, that's exactly what I'm talking about. And this is why I love DeFi. That's like I said, CeFi, you're taking a chance. But this is why I love DeFi. Because DeFi, the code is already written. You can go right and read the code right on GitHub and read it and understand the smart contract and see exactly how it works and how it operates. And then, you're fine. You know nothing to worry about. And then when you want to take your money out, you pay your loans back, and there you go. Or if you're just supplying it, and then you just supplying it, you just get some returns on it. You just go to your wallet, you just take your money out, and that's it. The code is already written. Like I said, it was written. But guys, let's do a Q&A. Let's see what everybody doing. Get it going. Let's get it going. Yeah, man. Shout out to the DCG family. Yeah, guys, if you guys are looking to learn how to trade, or you want to learn how to buy the right projects, then you guys want to buy the right projects and get into the right system to learn the right tools, you definitely want to get in the DCG, guys. And right below, guys, you see in the description box, you can click the link, and you see exactly what we're doing over there. And man, we getting it going, man. Even in the bear market, we we hitting them, baby. We hitting them in the bear market. You know what I'm saying? So it's definitely something you guys want to do. And also, guys, make sure you follow me on Twitter, because we are doing a $500 giveaway this Saturday. $500 of Bitcoin we're giving away. All right, this Saturday at I think 8 p.m. Eastern Standard Time. So this Saturday 8 p.m. Eastern Standard Time. Follow us on Twitter, guys, for more updates. So make sure you're on our Twitter. We tweet it out, and then you retweet. You're gonna be rewarded. You retweet, you'll be rewarded. I'm putting it like that. You know what I mean? And you'll be rewarded right on the call. We throwing it right to you. All right. So let's see. If you have any questions in the chat right now. Everybody's shopping right now. Yup. Let's see right here. Don't even eat at their own franchise. Nope. Immutable smart contracts is where it's at. Yep. Yeah, I mean, that's where it's at. That's what the smart contracts is where it's at. All you got, the code. You should rely on the code. The code is there. It's open source. So you can see exactly what's going on. And, you just put them in link your wallet, and then you do what you got to do. When you start, when you're dealing with these companies, that's the problem. Like, a lot of people, they blame these company failures on crypto. It's like, no, that's not crypto. It's like, you don't blame if a lot of companies on Wall Street get greedy and do something crazy. You don't blame the Wall Street. You don't blame the company's greed on the U.S. dollar. You know what I'm saying? You don't say, oh, the U.S. dollar is screwed. Oh man, these companies are so greedy. The U.S. dollar is a scam. No. You say the company, bad management. They didn't do things right. They was doing a bunch of Super Bowl commercials, paying a bunch of money for Super Bowl commercials all this time, and now they laying people off. And it's that simple. You know what I mean? This is bad business, what they was doing. They were being greedy. They're being very, very, very greedy. Yeah, but Celsius, I mean, no, Celsius they pay on their loan. They pay on their loan. They won't be playback maker, and their liquidation down to 27, 22. So we see how this play out. But I did hear that Celsius, Sam Bankman-Fried and FTX was looking to acquire Celsius, and reason why they went with BlockFi because Celsius had a $2 billion mishap. They didn't know where $2 billion was at. When the accountant was looking at it, $2 billion was missing and it wasn't accounted for. So that's what's going on with Celsius right now. So they got to find that $2 billion. But I don't know. I don't know where that $2 billion at, and I don't know. A lot of people try to figure it out. But the good thing is the people that try to try to liquidate Celsius and try to liquidate Michael Saylor and MicroStrategy, they got a long way to go right now because they paying out those loans. The loans paid down and liquidated. To get Bitcoin to be liquidated in Bitcoin got to drop down to $2,722, and they're not gonna cut their nose off to spite their face. You see what I'm saying? And because they love the industry as well, they're not gonna push Bitcoin down to that. Yeah. These platforms are gonna fold, and at the end of the day, a lot of people act like these platforms were here. This like Bitcoin and crypto was based on these platforms. Most of these platforms you see folding and everything, they've only been around for the last 2-3 years. Really popular for the last 2-3 years. When the money was being pumped into the market, to all the different markets, and money being pumped to the economy. We had quantitative easing, and the Fed was just pretty much printing money. A lot of these companies, that's when they was there. They came in, they took advantage with the opportunity, and that's it. Instead of being on Wall Street, they came to crypto. That's it. It's the same greedy people, man. I'm telling you, you go to these conferences, man. You talk to these people, and they in these prominent positions over in these prominent positions over in the top companies. I'm talking about your OpenSeas. I'm talking about your Coinbases, your Celsius, your Binance, things like that. They are they came from Wall Street. A lot of people came from Wall Street, and they're gonna do the same exact thing in crypto. You know what I mean? They're like, okay, well, I don't want to be over here. I'm gonna come over to crypto. It's this new industry, new technology that's out there, in which a lot of new money coming in, and I want to take advantage of the opportunity. And they're gonna come up with the same greedy practices, the same bad practices, and everything like that. And then what they're gonna do? They're gonna just, things like this gonna happen. Yeah, Voyager and all these other companies. This stuff right here gonna happen. And then what happens is, the greed gonna happen, and then when the money start coming into the market, all the Bernie Madoff faces start showing up, and that's what you're gonna find out. These are the Bernie Madoffs of crypto right now. They got BitConnect. You know what I mean? I put it like that. So that's why you got to understand, like, okay, cool. These companies only been around for a few years. This is not what makes Bitcoin. It's not what makes crypto. They only been around for the last few years. Crypto been around, since 2009. So these companies don't make crypto. These companies not going to break crypto. Now the prices draw down, and big reason why the crypto market is down is because the Fed started quantitative tightening in June 1st. You know what I mean? The market's been raising rates, so all markets are down. You know what I mean? I think Wall Street down had the biggest. I think the biggest impact or the biggest blow to Wall Street in like 52 years, something like that. So, all markets are down. So it's not like if crypto was down and Wall Street is still up. No, everything is down. Everything is down. Real estate about to be down. So you can't blame it on this stuff. This is here. This doesn't make crypto. It's not gonna break crypto. And despite all this stuff, Bitcoin is still at 20,000, over 20,000. You know what I mean? So despite all this turmoil, despite all this craziness, you understand Bitcoin is still above 20,000. You know what I mean? So because it's a technology, guys. It's a technology. But man, if we don't have any more questions, guys, we're gonna end this right here. I'm gonna eat me some tacos. You know what I mean? And but yeah, guys, make sure you follow me on Twitter because at The Crypto Black. Follow my man Mike Miller on Twitter as well. And you know, we're giving out $500. And watch out, look out for the flyer. And we're giving out $500 this Saturday in the bear market because we still killing it, baby. In a bear market and Bitcoin winner, crypto winner, baby. We killing it. So we don't have any more questions, guys. We're going to end this live. I'm going to holler at y'all. Make sure you guys stack your sats and chill. It's your guy, Crypto Chuck, here with the group Crypto Black. Guys, make sure you just DCA. Don't go too crazy. But just I'm looking for Seek to still the run up, and then OGN. OGN, the snapshot. I'm thinking everybody gonna go in on the end for the snapshot. I think it's from July 5th to the 12th. So I'm guessing probably around the 11th or 12th. That's when everybody gonna go rush in for that snapshot for OGN. If it was a 1-day snapshot, then everybody it'd have been ran up and then dumped by now. But I think everybody gonna rush in to buy OGN for that snapshot for the airdrop that's coming out. So the snapshot is going to be, I think, from the 5th through the 12th. It's on my Twitter, so guys, make sure you go check it out. Between the 5th through the 12th, I believe. And then I think around like the 11th, 12th, you start, or the 10th and 11th, you start seeing the price start pushing up for OGN for that snapshot. And then that's when you're going to start, people get that snapshot for the airdrop, and that's when you're going to start, people start dumping it. So make your money from it, guys. As soon as that snapshot is taken, get out because they're gonna dump. They're gonna dump on you. I'm telling you. Yeah, through the 12th. Yep. So 5th through the 12th. So yeah. So on the 12th, make sure you're out of it because I'm telling you right now, they're gonna dump on you. Just have your stop losses in. You know what I mean? But yeah. But I'm gonna see you guys next video. It's your guy Crypto Chuck here with the group Crypto Black. Make sure you guys Make sure you guys get ready for that snapshot. Make sure you guys look out for that Seek. The land sale, BNB gonna be pushing strong. Binance said he's looking to buy 50 companies. BNB not going anywhere. One of my favorite tokens. I